Hey folks, welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist here. Now, we have to look at what the S&P is doing today. Now, the S&P is only down about 0.4% at this point in the day. The Nasdaq down slightly more, but it's more important to me to note the major levels that are staying intact. For instance, the markets opened higher today, but again have sold off. The key here is on Friday we put in a daily topping tail. Now, on a technical analysis basis, that is a topping signal until proven otherwise. In addition, we saw a trend line that has marked the highs and lows since going all the way back. Get this, guys, going all the way back to October 2023. That has marked the point of basically marking tops and bottoms. And that, to me, is extremely powerful. So let's get into the charts here and take a look as we get into things. This is what I'm talking about right here. So take a look. There's your topping tail. All right, topping tails. What are topping tails? Topping tails are the highest point on the chart in recent history. You then have to have the body in the lower 50% of the entire length of the candle, and the daily close must be in the lower 25%. This candle on Friday is a confirmed topping tail. Notice Monday we had the gap up on the back of AMD and the OpenAI partnership, which I talked about how shady it was. Basically, AMD is going to get $100 billion in revenue from OpenAI over 4 to 5 years. In response, AMD is giving basically 10% of their company away that OpenAI can sell to raise that capital and give it right back to AMD. Either way, markets were up yesterday, but notice we never closed above the high of the topping tail. Today, we opened up, we tested that high, we sold off, and we're down again about 0.4%. So the topping tail is staying intact here, which is something as a technician we must focus on and watch. Now, listen, the topping tail can be negated. That could happen, and it has happened in the past. But ultimately, it's a probability game, and we go with the technical signal until proven otherwise. So just a reminder, to prove it otherwise, what needs to happen? Any daily close above the high of the topping tail at 67.51, that would negate the power of that. Now, you still have this amazing trend line. Let's get rid of that line there. So this is the trend line I was talking about that goes back to October of 2023. Amazing here. Look at this. The low here, all right, which arguably was the beginning. I mean, you had the bear market bottom here, but this is really the explosive move up, the liberation day and subsequent sell-off, and then the explosive move. And that's taking that low to that low to that low. We fell through in the liberation sell-off, and then we've gone back up, and notice how it becomes resistance. So isn't it amazing how the topping tail there marked the high of that was right at that trend line as well? Now, as if there's not more, folks, and this is what has me thinking there's something here to this potential sell-off versus just a 0.4% sell-off. And listen, again, could it be wrong? It could be, but let the charts prove it to us. But take a parallel now. All right, go back to your COVID lows, draw that through these lows here, right through these lows. So you're going basically from the low in COVID to the bear market low to this low here in October to the liberation day low. Drag that up to your highest point here, right here from the bull market high of 2021. Look at where that goes. All right, now listen, I always say where there's smoke, there's usually fire. When you have a confluence of signals that are right at the same level, it basically is if there's a wall in front of the markets with one of those. Then there's two other points, right? You have the topping tail, the trend line back from October 2021, and then the parallel trend line. That's like having 3 brick walls in a row. So listen, anyone can break through 1 brick wall with a sledgehammer, but 3 in a row, yes, it's possible. Is it really hard to do? The answer is yes. And that's one of the things that we're keeping an eye on here, because it's hard for the markets to break through, especially as overbought as we are. You look at RSI, negative divergence is there. You look at other signs like Amazon's breaking down, Meta Head and Shoulders is breaking down. A lot of these stocks, except NVIDIA, NVIDIA is still holding strong here, and that's going to be the key here to the market. But that is starting to break down as well, or at least come back into a key level. Now, last thing I want to show you guys is this chart here. This is a chart of the VXX. The VXX, I've been talking about how it has been, even though the market's been going down, or excuse me, the market's been going up, which usually means the volatility goes lower. But look, volatility has gone flat, and we've now broken out of a wedge pattern. This could be an explosive start of a move on the VIX, the VXX, the volatility index, which basically denotes fear. And if that's the case, then you're going to get a big pop here, probably into the 40s on the VXX. And ultimately, that will coincide, just by nature, it should coincide with a market sell-off. Because remember, as markets rally, fear declines, VXX, VIX goes down. As fear increases, because markets usually are selling, then we start to see the VIX going up. And really, I'm looking for, I mean, right now the VIX is in the 16s. I mean, it probably gets back into the 20 to 25 range. So you're talking about upwards of a 25% move, in my opinion, at minimum, right, on the VXX. And I think, again, you could even see more of that. That would push the VXX here back again north of 40 here on a move. So it could be a big time indicator that all coincides. Now, listen, again, like I always say, what I'm talking about in these videos is probability based, meaning that there's always a chance it doesn't happen, right? If we get above that trend line, those trend lines, and negate the topping tail in the S&P, okay, we're going higher. Then you just tip your cap to the market and you say, okay, market, you've negated the bearish resistance levels, the topping tail, which is a bearish signal. Off we go to the upside. But until that happens, this market is looking very, very much like it could roll over. And one other thing I'll mention here, really important. Notice how yesterday we had this great OpenAI AMD news, and the semis were up pretty well, although a lot of semis put in topping tails, which is not good. But also look at the gains in the market yesterday. S&P was up like 1/3%. That's all you're going to get out of one of these monstrous deals. NASDAQ 100, which the AMD was a majority of the gain there, but that was up about 0.75%. My point is, you're seeing diminishing returns on good news. And that's also an indicator the markets are getting tired. Now, again, when we're talking about a correction, let's go back to the S&P chart and talk about corrections. So on the way down, let's talk about this. I'm going to get rid of the parallel, so it just makes it easier for us. We know there's multiple levels up here, right? Right now we're down 0.4%. Be interesting to see where we end. But as the market pulls back, if it does, there's going to be a lot of support around 6660. So 6,660 on the S&P. If that breaks and confirms, it opens the door to a bigger corrective move. My analysis is showing that we're likely in that scenario, we would start a correction back to 6,100 right here, right in this zone. In fact, I'll denote it here very simply with a zone range, right? And so basically you're looking at this as being your corrective move, anywhere from this high to these highs right in here on the S&P. That would be 6,150 down to about 6,100. That would be your likely reversal or pullback level or retrace level. Now, what's interesting here is we can do a fib. And if we do a fib, we can see that that's virtually right around the 382 Fibonacci. It would pierce of that would be the 382 Fibonacci range. And by the way, that 382 is right here. And by the way, 382 is your run-of-the-mill correction or pullback. 50% would be solid. 618 is like your big one. So this, again, this zone here, that's where I think the markets are going to pull back. But first, don't forget, first, we need to break below this 6660 level, confirm, then game on to the downside. So yes, we're down on the day, S&P down 0.4%. We have the signals that a top could be in, but until we break this trend line and confirm, we're still technically in an up sloping wedge pattern. Lots to watch here, guys. The markets are getting exciting. We're going to see where things go in the coming days. Of course, I'm here to keep you guys posted. Have a great one. Thanks so much. Take care.